Well, the sun is now setting before 5 p.m. and that morning air is starting to feel just a bit crisp. Both signs that fall is here and winter is just around the corner. And temperatures aren't the only thing that begin to decline this time of the year. Historically, we see the housing market also slow down as we enter the last 2 months. And this year has been no different in Irvine, as the majority of the housing market's measurable statistics all saw a decline in October. Starting with total sales, we saw 64 detached single-family homes sell in October, a slight decrease from the 68 that closed in September. This gradual drop in sales is quite typical for this time of the year, as many buyers shift their focus towards the upcoming holiday season. However, the time of the year is not the only factor influencing buyer demand, and 2025 has brought on plenty of challenges. And the most important factor has been mortgage rates. Overall, this year has been positive for rates, as we've seen a general downward trend, but that decline has been anything but steady. There have been plenty of dips and spikes along the way, each impacting demand levels. September and October were prime examples of this. In both months, the 30-year fixed rate dropped to 6.13%, marking the lowest levels we have seen all year, before quickly jumping back up by nearly a quarter point each time. The cause of the sudden increase was actually the Fed's decision to lower the federal funds rate by a quarter point. And that might sound completely counterintuitive, but keep in mind that mortgage rates are tied more closely to long-term bond yields, such as the 10-year Treasury, rather than the federal funds rate. And so just because we see in the news that the Fed is lowering rates, that does not directly correlate to lower mortgage rates. This volatility in mortgage rates continues to make buyers hesitant to move forward with their purchases, even though today's rates are some of the lowest we've seen in the past 3 years. This last month's housing demand level readings illustrated this perfectly. The jump in mortgage rates in September, combined with the typical seasonal slowdown, led to a sharp drop in housing demand in October, as only 34 detached single-family homes in Irvine were able to find their way into escrow. The decrease in demand and sales also affected supply levels, as many sellers decided to pull their homes off the market after not finding their desired success. Active listings dropped to 269 homes, while just 73 new listings came to market in October. Despite this decline, 2025 supply levels remains noticeably higher than it was in October of 2024 and much higher than that of 2023. Economically, when supply outweighs demand, we see prices fall, and that has certainly held true here in Irvine. The average price per square foot for detached single-family homes came in at $904, up from the surprisingly low September reading of $857, but still continuing the overall downward trend we've seen since March of this year. For the final 2 months of 2025, I expect Irvine's housing market to follow historical trends. Total sales, demand levels, supply levels, and ultimately home prices should all continue to decline. For buyers, this should come as welcome news, and I would highly recommend taking advantage of this much more favorable market conditions, as historically we see a surge in demand and ultimately home prices to start the beginning of the year. And if mortgage rates continue their steady decline to end out 2026, then I think this surge in competition in pricing will be even more inflated in 2026 than we have seen in recent years. For sellers, if you're currently listed or planning on coming to market, it is important to be aware of all of these market conditions we just covered and be prepared to be patient. If you're on the fence of listing right now, I would honestly encourage you to wait until the beginning of next year. So if you're considering buying, selling, or maybe you just want more insight on how I would recommend navigating this tricky real estate market, then please feel free to reach out to me and I am happy to help. If I don't hear from you, then I would at least greatly appreciate if you took the time to click the like or subscribe button below. and I look forward to getting to bring you the next housing market update. Cheers.